Jerry Webman, Chief Economist, Oppenheimer, joins us on the show now. Jerry, good morning and thank you for joining us. Jerry, I'm going to first talk about that detailed note which you've wrote, and you've wrote a detailed note on India being cautiously optimistic on the market in 2011. How much that has changed in your view since then?
Well, I remain optimistic about India's growth potential, and that's reflection in both the debt and the equity markets. Obviously we were a little more hopeful about the rate at which India could grow when I last visited there 3 years ago. And there's a little disappointment over the last year or so that growth in India has fallen back under 5%, and I think projected to be under 5% during this year. On the other hand, the long-term advantages that India enjoys, particularly demographic, one of the youngest countries in the world, the tremendous amount of human capital, the intellectual strength of the technical strength in the country. So we expect that growth to regenerate, to reaccelerate in coming years. But we've been a little disappointed over the last year or so at the rate of growth in India.
Jerry, so let's understand your view linking politics and economics as well as markets. I mean, as an FII, how do you see the political situation evolving ahead of elections?
I don't think the election in any of the world's great democracies, India and the United States being, of course, two of them, I think these elections are very important for the quality of life of citizenry, but for markets, honestly, they're secondary to the ability of the economy to grow and companies within the economy to profit from however the economy does grow. If you'll excuse me, one of the things I've said a lot to U.S. investors who've been concerned about our own less than perfect political situation over the last several years is that disliking the government is not an investment strategy. And I think investors are wise to think about that in India, whether the coalition that they prefer wins the parliamentary elections or fails to win, or as we think is probably most likely what the poll data says right now is really a lack of any majority in the Lok Sabha after the spring elections. So I think people in the markets need to focus on how money is made and who makes it and how efficiently they do so, what their prospects are, and save their political thinking for their role as a participating citizen.
So even though you won't comment on specific analyst, many analysts believe that market has already priced in a clear mandate. What scenarios politically would influence your view on India?
Well, BJP has, in the world's eyes, been associated with some of the pro-market reforms that they instituted last time they were in government. It's well to remember that even though reform has been slow to move ahead, and by reform I mean liberalizing the financial markets, I mean further disinvestment of state-owned enterprises and so forth. We have to remember that Congress was really the first to start those kinds of reforms 20-some years ago. So both major coalitions have some history of moving in directions that investors have found to be friendly. So a shift in government at this point may accelerate reforms. We'll just be watching to see whoever takes charge, which part of their heritage they emphasize. We would obviously like to see further privatization. We'd like to see further reforms of labor laws, investment laws. We'd like to see further investment in infrastructure and so forth. Whoever ends up controlling Parliament, whatever coalition it ends up being once the elections take place.
So, but for somebody who can correlate markets and politics, what do you foresee the markets to do on, around the event?
Well, markets, the poll results that I've seen most recently suggest that it will be difficult to form a government, and so the markets